Vietnam's growing economy and favorable business environment continue to draw significant foreign investment. International investors interested in establishing a presence in the country have a range of business entities to choose from. This video provides crucial information for foreign investors aiming to establish or expand their business presence in Vietnam. It covers the essential aspects of the investment process, including the available business structures, key roles and positions within Vietnamese companies, and the necessary documentation for investment and incorporation. In summary, the process to register and set up an 100% foreign-owned enterprise generally requires from 2 to 6 months depending on the nature of the business and company type. A representative office can alternatively be set up in half that time, but is more limited in the types of activities that it can engage in. Below is a diagram summary of the 9 main stages of setting up a company. Step 01, choose business structure. Step 02, reserve company name. Step 03, prepare relevant documents. Step 04, apply for investment registration certificate. Step 05, register company. Step 06, apply for foreign investment license. Step 07, register for tax. Step 08, create company seal. Step 09, open bank account. Limited liability company, LLC, and joint stock company, JSC, are 2 basic forms of company establishment in Vietnam. Given their relative simplicity in operation, LLCs are the most common corporate structure for foreign investors. JSCs have more requirements, including a minimum of 3 shareholders. They are preferable for companies that may mobilize more capital by share issuance and seek listing on a stock exchange in the future. Additionally, if the foreign investors do not want to establish a company officially in Vietnam, they can consider other structures: representative office, branch office, or business cooperation contract (BCC) with a Vietnamese partner. Required documents. Standard documents required for establishing a foreign invested enterprise in Vietnam are listed below. The legal documents of the foreign investor may vary depending on their jurisdiction, but the list below provides general guidance on the documents lodged with the authorities. Documents required from the investor are: legal documents of the investor. For corporate investors, incorporation certificate, company extract on director address register, constitution/charter and all amendments thereof. For individual investors, passport for the individual investor, passport/ID card of the legal representatives, passport/ID card of authorized representatives of the investor for the corporate investor. A bank letter issued by a commercial bank or a bank statement from the investor showing that the account balance is equal to or exceeds the value of the investment capital for the company being established, lease contract, or MOU, for the head office of the new company and documentation related to the landlord. The above documents, other than the bank letter, need to be legalized and notarized, which will depend on the document and the jurisdiction. Key positions and their responsibilities. The main positions that each company must have in Vietnam include: legal representative. More than one legal representative can be appointed, but at least one must generally reside in Vietnam. General director. The general director is the person who operates the company on a day-to-day basis. Please note that these 2 positions can be of any nationality, but there may be work permit matters to consider for foreign appointees. Chairman of the company/members council/board of management, acts on behalf of owners/capital contribution members/shareholders to execute their power toward important decisions related to the company's structure. Chief accountant. This position is appointed once the company is established and takes on many responsibilities that a company secretary would do in other jurisdictions. Other requirements and informations. Once they have received their ERC and completed the initial post-licensing activities, companies can open bank accounts with commercial Vietnam-based banks. The process is far easier for most banks than in other countries in the region due to the initial vetting and documentation process undertaken to obtain the ERC, allowing the banks to rely on this documentation for most of their needs. The company typically need 2 types of bank accounts: capital account, used to receive charter capital contributions from foreign investors. All transactions related to capital contributions, profit remittances, and capital repatriation must go through this account. This is mandatory under Vietnamese law for managing foreign currency and equity transactions. Operating account, used for daily business operations, such as paying salaries, utilities, taxes, and suppliers. This account can be in Vietnamese dong, VND, or foreign currency, USD. Investment capital and charter capital. The capital of the investment project needs to be detailed in the IRC, and the company charter capital must be specified on ERC. In particular, investment capital. This is the total funds/properties that are to be invested into the investment project, including capital contributed by the investors, loans as other capital to be mobilized by investors, retained profits that are to be reinvested in the project, if any, charter capital, the company's paid-up capital, recorded on the ERC and represents the amount of capital that members or shareholders commit to contribute within a certain period, as stated in the company's charter. This contribution must be made no later than 90 days from the issuance date of the ERC when a new company is set up. The charter capital can be increased further during the company's life. While the procedure may seem complex, with proper planning and adherence to regulations, foreign investors can successfully navigate the Vietnamese business landscape. The country's growing economy and strategic location in Southeast Asia make it an attractive destination for international businesses. It is important to note that regulations and processes may change, and specific industries may have additional requirements. Therefore, it is advisable to consult with local experts or legal advisors to ensure compliance with current laws and regulations. By understanding the different company structures, key positions, capital requirements, and registration processes outlined in this guide, foreign investors can make informed decisions and take confident steps towards establishing their presence in Vietnam. Thanks for your watching.